So I took a long on EU and I'm going to break it down step by step for you guys in this video. It was a really clean setup and I'm going to walk you through all of it just now. Now let's dive into this trade recap. This was a long that I took, which was a 3R and it hit 2R as well. So on the daily, what can we see? We're breaking highs constantly, very bullish structure. Let's jump down to the 1 minute. Actually, I just don't want to go back to the daily and tell you where we could be headed. So I'm thinking we're going to take out these highs, right? This is a swing high because this high is lower than this high, and the high to the right is lower than this high as well. So we can mark that out. That could be basically where the daily chart is heading, right? Liquidity is like a magnet, so it's always attracting there. So if we jump down to the hour, I go to Asian session, right there. So midnight, 7 to midnight New York time. So what am I looking for? I'm looking for fair value gaps for price to tap in, or liquidity for price to take out and then fuel that main move up. So this is what I was looking for. If we go down to the 15 now, what can we see? Clear liquidity there. I'll just mark out the Asian opening price, the midnight opening price, which is right there. So we want to be buying underneath that. So at 2 a.m. I want to see these lows swept, these lows swept. There's also a order block there, which I believe has been tapped into. There's a fair value gap there as well. So this is 12:45. Let's get to 2 a.m. As if you want more info on the strategy or just ICT concepts in general, then make sure to check out the free trading notes down in the description below. Also, if you're enjoying this video so far and it's bringing some value to you guys, make sure to smash the like button. I have a target of 15 likes for this video. Thanks a lot, guys. I appreciate you guys so much. 1:45, boom. As you can see, at 2 a.m. we've swept this low and we've filled in this imbalance already. That's another confluence. So now let's head down to the 4 minute. And look at this. Look at these wick rejections. What is that telling me? It's telling me that price doesn't want to go down anymore, which, you know, aligns with our daily bias. The high time frame narrative is always going to be powerful. So my break of structure line right there. I'm looking for that to break with a body, of course. Okay, I believe this high is, yep, this becomes a new swing high. As you can see, this is a body break, right? So this was actually the first entry. However, there's a reason I didn't enter, and that was because of this. So when I saw this, I said, you know, this could be a massive liquidity sweep, probably into some supply here, and we could be going down. So I actually didn't take this trade, which I should have, and if I did, it would have been fine. I would have been covered with my stops, but we ended up going down, and then we had another high there. Right there. So now we're tapping into this fair value gap. And look at how price is reacting to this fair value gap. This is like the main thing you guys need to understand. How is price reacting to areas of value? When we tapped into this fair value gap, what is the candlesticks telling me? Look at this. Is it telling me that it wants to go down? Not really. So now when we get a break of structure like so, it just, you know, combines everything that we've been talking about and proves it. But obviously there's no guarantee, right? I mean, I could still lose this trade. It's just I'm on the high probability side, which is trading in a nutshell, sticking with high probability setups. So the fair value gap right here, as you can see, break of structure, massive gap, imbalance. Price likes to come back and fill that imbalance and then carry on up. So covering the fair value gap pattern for a 7 pip right there. And we have various areas of liquidity to target. And we have various areas of liquidity to target. We have one here, you could take a partial maybe. Obviously the Asian high is another liquidity target. And one more thing is that we're buying underneath the opening price, as ICT says, which is very high probability as well. So I went for a standard 2R. So let's play price and see what happens. So it tags us in. And look at that. I mean, it just shows you that if you know how to read the candles, they can like tell you where it wants to go in a way, right? Look at these wick rejections at an area of value. Now, one important thing is that if we're seeing these wick rejections and break of structures just randomly in price on the chart, then it's not always going to go up or go in your way. However, if you combine that with an area of value like a fair value gap or a order block, or if there's a sweep of liquidity, it just adds that much more confluence and makes your trade that much more high probability. So 1 to 2 is, did it tap it? No. Yeah, 1 to 2. So we actually went here, I remember this, and I thought, you know, I'm going to lose this trade now because there's a massive wick there. We swept the Asians high, but, you know, stick to the plan. Didn't move my stop to break even or anything, and we ended up taking it out. And we even hit a 3R, I believe. So that was 3R, which was actually, I believe this was another high or something. Yeah, this was the high that we were talking about on the daily chart. So this was another target, and we ended up tapping back into the break-even area and then eventually going up and pushing past that. So a 3R as well. So pretty solid trade in my opinion. As I was saying, if I entered on the first entry, which was right there's a fair value gap there. Oops. Then I would have a 7 pip stop standard, so I would still be covered with that, and I would actually hit my take profit even sooner, because 2R would be all the way down here, 3R would be up there somewhere. And another thing I'm really testing is that how often do we hit the mean threshold of the fair value gap. So this is the fair value gap here. Let me just delete all of these drawings. So that was a trade breakdown basically, but I just want to show you guys something else. Let's just delete this. So this was the fair value gap. Now the mean threshold is basically the 50% area, which is around there. Now what they say is that in a fair value gap, the 50% area usually gets hit. So if there's a fair value gap here, somewhere there, then the 50% gets hit. So if we draw it there, it's very ugly. Can I do an EQ? Yeah, I mean you can see a 50 line there, but basically what they're saying is this usually gets hit and then it goes. Now what this does is that it'll give me a better entry and also a better risk to reward, so my 2Rs, 3Rs will get hit sooner. But I'm testing that out. I'll let you guys know how that's going. Yeah, that's the trade breakdown. Hope you enjoyed, hope you got some value out of it, some valuable insights, and yeah, see you guys next week.